All right, good morning, ladies and gentlemen. Today is 5/5/2021, May 5th. Wow, is it Cinco de Mayo? I think it might be. I'll have to check that later. Yeah, so May 5th, 2021, and I'm back with another edition of the Wednesday live show, and quite a bit to talk about. However, the market itself has up until yesterday, the market actually, I'd say for about the past week or so, market's kind of been stuck around the all-time highs, and there hasn't been a whole lot of activity. Kind of unusual for this time of the year, but there hasn't been a whole lot of activity just because of sort of what the market itself has done and where we are in the cycle. So, jump right in, take a look at the S&P here. So you can see that over, like over the past, up until yesterday, 1, 2, 3, 4, 5, 6, 7, 8. We had a little bit of action over here, just a little bit, but clearly the market's kind of trapped in this big range up here. Actually, it's not that big of a range, right? These lows are like, not even 2% off of the highs. So, but here's the thing: is with the market up here, having rallied up to these highs and that, um, there's just not been a whole lot of stocks that have had the type of long duration, I'd say not long, but medium duration, sort of orderly pullbacks that the system looks for pending trades. And so there hasn't been a whole lot happening on the pending list yet. However, all of a sudden, yesterday and this morning the market's acting like it wants to kind of dip a little bit. The funny thing is that yesterday the market took a pretty good winger early on. I mean, basically the when it opened, the S&P took a nosedive of about 60 points roughly, and then at the end of the day there was a big rally, right? And kind of brought it back up. So, and then this morning, of course, we gapped up to the area that we opened yesterday, and now as we speak here, the market's kind of losing steam and fading back down, very similar to what it did yesterday. So it's kind of acting like it wants to sell off a little bit here, right? But the thing of it is that, and I should probably start getting used to drawing lines on this chart, but I haven't yet. But we'll take a look at the SPY on this chart here. A lot quicker and easier to mark up. There's this huge level of support right here. By the way, on this particular chart, I can only pull up SPY, not the S&P. But anyway, there's a huge level of support, and so far so good. I mean, here's the thing: is there's the all-time high. That was just this past Thursday. Was all big gap up to the all-time high, and then a fade. And interestingly enough, so on this particular chart, I have these bars colored. They're red if the close is below the open, right? And as you can see, like right now, it's trading the current price is below the open, so it's red. And so interestingly enough, we're looking at, 1, 2, 3, 4, 5 days in a row. I'm sorry, 6 days in a row. Yeah, 6 days in a row, not including today, where the market opened and then the close was below the open. And so that's kind of weird price action. It really is. Especially when the market gaps up like it did, where it gapped up to this all-time high on last Thursday, and then spends the rest of the day kind of fading down. Now there was some pretty boring days here, right? These couple yesterday and this all-time high day were a little bit, I would say, of like a longer range day, but I wouldn't exactly call them long range days, right? And then we've had a bunch of like little kind of tiny narrow range days here, which really really are kind of boring days, like little narrow range days, not a whole lot of price action. But you can see that the S&P is actually, it's closer to the all-time high up here. It's closer to this all-time high than it is the bottom of the range. But it's just been acting sort of weird lately. And, also we're right sort of in the thick of earnings season here. We've been in the thick of earnings season. We're a little bit getting towards, I would say, towards the tail end, but we've had a few of the positions that have gotten open positions that have gotten closed ahead of earnings. I had one up a minute ago, PayPal. Actually, I'm sorry, PayPal. Yeah, PayPal. I think the earnings were it hit the trailing stop right before it was due to get closed for earnings. I believe this was the earnings date. It might have been today. I don't know, but it got closed ahead of earnings. So you can see, triggered in, went up, hit the target. It ran. The funny thing is, when I was marking this chart up originally, like when this thing triggered in, I drew this green line up here as overhead resistance. Actually, I think I might have drawn it back when we were rallying up there, saying that it needed to break through that, and that's exactly where it got rejected, right at that overhead resistance level. But regardless, it did turn into a fairly decent trade. Um, Ran straight up after it triggered in through the target. So let's see, another one that just got closed was this Cyrix, and it was kind of unfortunate the way that this got closed yesterday, because the whole market, bunch of tech stocks gapped down at the open, and so this was unfortunately one that gapped down with the overall market. Look at this earnings, and this is why we don't hold over earnings. Now, sometimes lately we've seen some pretty decent earnings moves to the upside on some of the stocks that have released earnings. I think this other one, this MOH here, this got closed ahead of earnings, and then it actually popped and has gone up since earnings. But Cyrix was just basically a wash, because there wasn't a whole lot of time. That's another sort of weird thing. Typically, if there's a week or so away from earnings, we'll go ahead and let it trigger in. But you can see it didn't really amount to a whole lot. And of course, I mean, look what it's doing today here. So it gapped up and then pushed higher, right? Because they just released earnings after the bell last night. And so this is why we don't hold over earnings, because there's just no telling. Now, of course, the entire market is sort of selling off here. Let's look at this. So in this particular chart, the way that it's set up is the bar is red or green based on whether it's above or below yesterday's close, right? So you can see it's like it's sitting right at yesterday's close, like the current price is sitting right at yesterday's close, and it keeps turning from red to green depending on whether it ticks below it or above it. And so, this is stockcharts.com charts, and I haven't figured out a way. I don't think there is a way to set it the way that I want it, where it's basically, and so you can see, the difference in the color of the bars based on whether it closed above the previous day's close. So, for years I've been saying that, kind of one of the sort of smoke screens out there in the market is the idea that if the market or a stock is above the previous day's close, it's considered a rally. At least it is in the financial media. Even if the market gaps up and spends the rest of the day selling off, right? And so I've so many times I've seen this over the years, where you get a market that gaps up real big at the open, and they're all excited on CNBC, right? And it spends the whole rest of the day just going down. And a lot of times stocks will gap up significantly at the open and then spend the rest of the day just fading down. So I've seen a bunch of charts that basically say that the majority of the gains in the S&P for years now have come from overnight, like the overnight gaps, which is just crazy, but it's true. And so I mean everybody knows about it now, but anyway, yeah, so PayPal actually tagged the trailing stop here ahead of earnings. So right now we just have these two open trades, as you know, MJ and it's been kind of volatile, right? It started off with sort of a nice push here, and then just kind of got trapped in a range. And of course, um, yesterday with a lot of tech stocks. Oh, I know what I wanted to look at before I looked at that was the Qs, because we always talk about the market being the S&P, but look at the Nasdaq here, right? This is kind of like the little warning sign, I think anyway. That should look like a warning sign because yesterday the Nasdaq was down over. I think it was down at one point. It was down close to 3% on the day. Um, it closed down, I think, a couple of percent, but that gap down and that push down, look at that. And so, this is kind of a toppy looking pattern right there, right? I mean, this thing's going to have a ton of work to do to get back up here and to make new highs, to push through all this resistance right here. So that's kind of a warning sign. And the funny thing is S&P, 1% off the all-time high, but there's a lot of stocks out there that have been creamed, really hit hard. And I was looking through a bunch of charts because I was trying to figure out why the system wasn't picking up more pending trades. I have a feeling, though, within the next few days we're going to start to see more stocks hitting that pending list. But I was trying to figure out why there wasn't a whole bunch of stocks that were setting up in the pending list. And then when I looked through 100 charts, I realized that a lot of the stocks that that have sold off, I mean, they sold off hard and went below all the moving averages and basically just tanked. I mean, there's a ton of stocks out there that have tanked, and so those aren't really necessarily good candidates because um, they're not in primary uptrends anymore. One of the things that the system, like one sort of the basis, I think, of the way that the system's programmed is that the stock has to be in like a primary uptrend, and then of course, it looks for a pullback in a primary uptrend. So let's look at and when I say primary uptrend, I mean sort of over the short to medium term. But I've seen a lot of the stocks that basically they sold off almost too much to become candidates. So anyhow, yeah, the Nasdaq looking pretty rough right here, right? There's that 50-day moving average. So the thing of it is it spent a couple of weeks up here in this, rallied up, and then it got trapped in this range, and that's, several weeks in this range, and now it's sort of breaking down out of that range. And so this sell-off, see, this is actually kind of starting to set up, right? But there hasn't been enough of a duration. To me, it looks like this sell-off is kind of just getting started. Now, of course, something could happen. It could rally right back up, just like over here, right? It sold off for a little bit, but then there was another sort of leg down before you got the rally, and we're only like 2 days, yesterday and today, 2 days of it breaking down out of this range. So it's kind of like over here, right? You had this range up here, sold off for a couple of days. So sometimes these, even back here, right? Couple of days where it broke down, and then you had some consolidation, and then typically, there's another leg down, and then you get some sort of a rally. But it is what it is. And let's look at the Russell 2000 real quick too, because it's kind of, I pointed out, I think last week or the week before, that it kind of had sort of a head and shoulders type of look to it, and interestingly enough, it still does, right? let me go over here to the IWM and just look at this real quick because yeah, I drew some stuff on here. Um, you know, at this point, there's kind of a sort of a trend line forming here. I suppose you could draw. Let's look at it over here. For some reason, yeah, I guess I'm zoomed out further over there, but yeah, there's a trend line here, and you know, the Russell, same sort of thing. The S&P gapped up to the all-time high this past Thursday, this day, and you can see that the Russell made the high, you know, way back here. That's sort of the head of the Head and Shoulders, and just drop a horizontal line up here. So that little gap up last Thursday was kind of just a little bit of a fake out, right? But you can see that it's basically, you know, it's kind of getting rejected right there, and you know, geez, I don't know. This apparently, theoretically, you know, there's the neckline right there, and so for this thing to really break down, I mean, it's got a long way to go. But I will say that the Russell 2000 and the Nasdaq, the Qs, are flashing some warning signs. At the same time, you know, it's $ SPX. At the same time that the S&P, you know, is like we're probably about 1% from the all-time high. This range right here is still just a range that hasn't really broken down. However, we could be in for a little bit of a rough ride here. At some point, it seems to me, just sort of based on what's happened in the past, and this entire rally, the angle of this thing's pretty amazing. But this is a 50-day moving average, and I'm thinking it's gonna come down and tag this 50-day, right? And so, you know, and of course, over here, like right over here, this little sort of this little pattern back over here, I said the same thing, right? Like I said, oh yeah, you know, this looks like, and it kind of felt like a little 2-day sell-off too. So sometimes you get these little couple of days sell-offs, and everybody gets nervous, and you know, it looked like a classic sort of spike high and a, you know, pivot high in that, and then lo and behold, it held that, rallied up, and made, you know, more new highs. So obviously 4200 is, we've had one close above 4200, and we're at 4167 right now. Is that what it is? Yeah, there you go, 4167. So when I put this crosshairs on here, it measures whatever day I have the crosshairs on. Let me turn that off. So anyhow, so that's that. The market's kind of weird here. It's acting like it wants to sell off. The S&P is still really hanging in there, which is kind of amazing. But the Nasdaq and the Russell 2000, and probably, you know, if you have a portfolio of a bunch of random stocks across all different sectors and all this type of thing, and you know, small caps, mid caps, then you know that a lot of these stocks are not represented very well by the S&P, because there's a lot of stuff that's down significantly from the highs. So it is what it is. But you know, we need a little shakeout in the market. I've been saying that for a while. We kind of need a little shakeout in the overall market, just because it's been kind of, you know, some of the rally is just seems a little bit overdone. Now the market is we're no longer overbought. Real quick before I switch gears here, let me pull up on this particular chart here. I have the RSI down at the bottom here. There we go. So as you can see, let me zoom out there. There's basically where this leg of the rally started was right here at the beginning of November, right? We had a big 5-6 days, and then it's just gone up at like, it's 45-degree angle, and then the angle got even steeper over here. And so if I was able to put, and this is another thing that bugs me about these stock charts, is I can't put a linear regression line on here. Like I can put a linear regression line on here, but I can't do it on the stock charts, which is kind of annoying. It's not one of the indicators. But if I could, you would see that it basically would intersect all this, and this latest sort of rally since the beginning of April, this breakout here in April, is above the linear regression line that goes back to kind of the start of this rally. So, and the linear regression line will go through these prices. It's like the best fit. That it'd be the average of all the prices here. And so, I mean, I know what it looks like, so I can visualize it. But anyway, you can see that the RSI got overbought back here, right? Overbought over 70, and so just sort of, even though it's gone a little bit higher, I suppose, theoretically you could draw a downtrend line across this and say it's a negative divergence, right? Like the RSI, the market made a higher high up here, but the RSI made a lower high. So there's another like little, caution flag. So everything's honestly sort of pointing towards, a little bit of a sell-off in the S&P, to sort of catch up with, the way most stocks are acting, quite frankly. So it is what it is. All right, so anyway, we have two open positions here. Quite frankly, the MJ still looks pretty good, right? Notice that the trailing stop hasn't moved yet. There hasn't been enough of a pull away from the trigger here, where the trigger area for the trailing stop to move up. And so there was kind of, there's a little bit of a higher low here. And so basically, it's just kind of, it's trying to rally. And this is the kind of like nice long-term duration pullback that that you want to see, and then really nice trend line break, sort of a change in trend. So here's the thing is the way that this market seems to be acting, and it wants to pull back, right? Or the past couple of days it's acting like it wants to pull back, and as I just pointed out, a couple of the other indexes of already sort of looking nasty. So we don't want a whole bunch of open trades, right? We don't want one of those like we've had times where there's like 8 or 9 open trades all at the same time. And so if you get a whole bunch of stocks that trigger in, they line up on the pending and then they trigger in, and then you get a sell-off in the overall market that brings everything down, then everything's just going to hit the stops. And so at the top of the cycle, basically the system is sort of telling me that it's at the top of the cycle, just because we're not getting anything showing up on the pending list, and so there hasn't been anything triggering in, and we don't have a whole bunch of open positions. Now we did have a handful going into earnings season, but earnings season kind of clears everything out a little bit. So anyway, let's MJ's kind of doing its thing. This JO, which is the coffee ETN, it's actually, I didn't expect it to necessarily all of a sudden take off like this, but it did. So what this is telling you is that the price of your coffee is going to go up. And the funny thing is, I looked at over on FinViz, I looked at a monthly chart of coffee, and quite frankly, coffee's like, back to where it was like 8 years ago. Coffee, the commodity itself, coffee's been really, really cheap over like the past, 6 or 7 years. And so companies like Starbucks that are selling coffee, for $5 a cup or whatever, they're making a killing because the commodity itself has been quite frankly, it's been down a lot from what it was. So there's been, a lot of deflation, but now it's starting to, the prices of commodities are just going nuts, right? Of course, everybody knows, lumber and corn and all this stuff. And meanwhile, the Fed says that, there's really no inflation. They expect transitory inflation, and I'm sure you've read a lot of articles and seen a lot of discussion on the the inflationary environment that we're looking at. I read an article yesterday, I think it was, that literally had like 20 different companies comments from their earnings calls about the prices of their inputs going up and about inflation. And so kind of off topic, but I think inflation expectations are going up, and everybody sees the prices of stuff going up, and you see shrinkflation and all that, and so it's going to be interesting to see how the Fed deals with that, because they've said that they're not going to raise rates until sometime next year, and so meanwhile inflation they're going to pretend that it's transitory, and they've been pretending that there's no inflation, and so I guess it just depends on a lot on what you buy, right? I don't want to get into the whole discussion of it, but trust me, inflation's the cost of living, and a lot of stuff that you buy is running well ahead of the CPI. They pretend there's no inflation. Meanwhile, your cost of living goes up. And so what's kind of scary is, once they let that genie out of the bottle, it's hard to put back in. And they think that they'll say it's transitory, and they'll underplay it until it's too late, and then we'll have to see what happens. But anyway, I guess what got me into that was, watching the price of coffee here kind of skyrocket over the past month. All right. I mean, basically, yeah. Look at this. This low right here, this low down here was April 5th, and here we are May 5th. So in 1 month, that's a pretty hefty rally in the price of, and this probably doesn't match exactly dollar for dollar, the price of the commodity coffee, but I'm sure it's pretty close percentage-wise. So anyhow, there you go. Trailing stop has ratcheted all the way up to what was the original target. Let me verify that. Yeah, 39.50 is the T stop here. So there you go. And of course, there was this little bit of a gap up here, and so I drew the compensation target to compensate for that gap up, which is not a bad idea. That way the percentage gain is roughly the exact same as what the system should. The system just compares everything to the trigger price for sort of simplicity's sake, but you basically get the idea. Typically, like I say, the way that stocks gap up and down nowadays doesn't really matter. It doesn't really matter if it trades at the exact trigger price or paying up for it, because generally speaking, the ones that actually work, like this one, they tend to go through the target more than enough to compensate for any gap up, right? And there's been a couple that over time, over the past couple of years, but generally speaking, I mean, if they work, they really work well, and that's another reason why the idea is to sell half at the target and kind of hang on for the ride, because some of the best ones, like the ones that have been the biggest winners, they blow through the target and just keep going. Most recent one I can remember is this ExxonMobil. This is kind of unfortunate. This back over here, right? Like ExxonMobil went through the target and ended up rallying like 30%. There's a 30% move. Then we got, we had a nice pullback. We got triggered in again. And the craziest thing about this, and I mean, this kind of stuff, this happens. This is just, it's sort of the nature of the business. So this low right here was 54.30 and the initial stop was 54.25. And so in theory, I'm just sort of, this is like a post-mortem on this on this particular trade because the trailing stop ratcheted up. Enough time went by, I guess, because we didn't really pull away from the trigger over here, right? Never pulled away from it, but all this sideways price action, trailing stop ratcheted up a little bit, hit the trailing stop, and then look what it's done. It's gone up, and as we speak today, actually, the energy stocks don't look too bad. When I was looking through all those charts, the only thing that really kind of looked good, there's plenty of stocks that have skyrocketed, right? Maybe because of earnings or whatever, and there's plenty that have tanked. But as far as like overall sort of looks for a swing trade, the energy stocks kind of look the best. Let me go back to this chart real quick, and just for the fun of it. There's not a whole lot to talk about here with two open trades, right? MJ and JO. So, but what I was going to say is, what was that one? There was one OXY. It's got a pretty good look to it. There's that 50-day moving average. So nice pullback and a trend line break, pushing up through this. Now that it's back above the 50-day, something like this could potentially show up on the pending list. So this has got a pretty decent look to it. Let's just look at ETF here, XOP. This is XOP is like a real broad. It's the Spider S&P Oil and Gas Exploration and Production ETF. So it's basically, a lot of people think of XLE as the energy spider, but the problem is that XLE is the last time I looked, it was like 30% of it was ExxonMobil and Chevron Texaco. So it's too heavily weighted in just those two stocks, whereas this is super broad as far as an index. But anyway, long story short, this has got a pretty good look to it. And so, a lot of the stocks, in it, look, CVX. There's another case, nice pullback to the area of the 50-day, breaking above it. So it looks to me like there's a handful of energy stocks that have pretty good looks to them. So that's the area that I would expect, perhaps, if we start to get some new candidates pop into the pending list. It wouldn't surprise me to see some energy stocks. Here's something interesting. I follow this ARKK ETF, because it's like, this is kind of a really broad, everybody's heard of this, really broad technology, all the momentum, newest stuff in here. Look at how this thing's broken down. But the thing of it is that, it broke down and then it bounced and sort of retested it. But just recently here, this is sort of giving you an idea what a lot of these momentum technology stocks look and feel like, right? Something like this is not going to appear on the pending list. For one thing, look at how it got rejected at that 50-day moving average. And so, yeah, I mean, it's below a downward sloping 50-day moving average, and so that's not the type of pattern that the system's gonna want to look for. But I just wanted to point this out because, I mean, here we are the past couple of days, sort of retesting, this area here, and I think that this is a pretty good ETF to kind of keep your eye on as far as what's happening with, all the momentum technology stocks. So, just off the top of my head, there's a lot of damage that's been done take this one for instance. And I'm not sure why this stood out to me. I think maybe just because it broke down here. I think they came out with earnings here, but this is sort of representative of like a lot of what happened. We had that crazy, just where all these momentum stocks at the around the beginning of the year, you know, this has been a great stock, right? And then they just went nuts, and then they've basically given it all back and then some. A lot of these we talked a while back about how these EV car stocks just went nuts, right? So this one's on a watch list that I have too, and I mean, look at what these things have done. And so this kind of it's kind of a little bit of a caution sign as far as like what can happen when I remember for a while there, all that they talked about on CNBC and the stocks that were rallying were all of these electric vehicle makers, right? And there's a whole bunch of them. There's a whole bunch. I can't even pull more than a few off the top of my head, but anything having to do with electric cars was like the hottest thing since sliced bread, right around the beginning of the year. But look at what these have done since. And so this is a nasty chart. This whole area right here looks very similar to that ARK fund, right? And every now and then I see they're public public with all of their trades and what they're doing and all that kind of stuff. And so I see occasionally people post like a list of all their holdings and what they're doing on a particular day. And a lot of days recently they've been really nasty, where almost all their holdings are down, and some of them down significantly. So yep, keep an eye on that. Keep an eye on that ARK, because this is it's kind of it's an ETF of all the sort of high-powered momentum stocks. But anyway, so here we are. I'm gonna wrap this up here in a minute, but here we are, still right up at the highs essentially. But the market's acting kind of weak. But the funny thing is, it's like every dip is getting bought, right? Anytime that we see the market kind of sell off, a couple of big down days, and then boom, right back up. One sort of nasty down day, and then the next day right back up. New intraday high, and the same sort of thing. And so it's amazingly resilient. But under the surface, I think that there's a lot of sort of turmoil under the surface. And let's see what the Qs are doing here real quick, and then I'm gonna wrap this up. Yeah, so it's not as rosy of a picture as one would imagine. And if you look around at, I'm not going to go through them, but look at the FANG stocks, right? They've kind of had some rough sledding lately too. So anyway, what we really need is just sort of a broad, an actual sell-off in the overall market. Right now, I think energy is probably the best thing going. And and other than that, I mean, there's plenty of stocks that have had really good rallies, based on earnings and that. And I think, but everything's kind of weird right now because everything's being compared to a year ago, where we were kind of like right in the thick of the pandemic and the shutdowns and all that stuff. So you got, earnings growing tremendously year over year, and you got GDP year over year and all that kind of stuff. But all the numbers are just so out of whack, it's hard to really know, what's really going on. So anyway, so just be patient. The fact that the Nasdaq and the Russell are kind of selling off a little bit harder than the S&P, that should begin to set up some new charts, some new stocks for swing trades. But also, keep in mind that if we're kind of at the beginning stages of a nasty sell-off, or even a correction, a pullback, a correction, whatever, don't want to have a whole bunch of open positions, right? So sometimes you got to know when to sort of be mostly on the sidelines and just wait for conditions to improve. And so that's sort of where we are right now. So anyway, Thanks for tuning in. I'll see you guys back here same time next week.